Now welcome back my dear class 12 student. This is a class of accountancy and we are already completed all the chapters. Today we will actually discuss about the sample papers. So sample papers is very important as per your board exam concern. So this time sample papers, there is a 20 MCQ questions, not all the question it is not compulsory to MCQ, but most of the question is MCQ type and one or two question can be as a 1 marks question. Okay, but most of the question will be MCQ type. So there is a part A and part B. In part A, we know three actually things comes, that is accounting for non-profit organization, partnership firms and companies account. And in part B there is analysis of financial statement. So part A is compulsory, each and every question is compulsory. In part B there is another thing is there, that is computer accounting, but you are not actually do the computer accounting. So part B, that is financial analysis, is also compulsory for you. There is a or in financial analysis on computer accounting. Okay, so computer accounting is not actually you just not taken actually. So analysis of finance statement will be the compulsory for you. And in first part there is a 13 MCQ question, 1 marks question actually, and in part B there is a 7 1 marks question, and there is a total 20 1 marks question will become. Another type of question, what will be their marks? That there is a 3 marks question will become, there will be 4 marks question will become, there will be 6 marks question will become, and there will be 8 marks question will become. So these are the question pattern actually. So how much there is a generally 1 marks 3 marks question will become, there is a and both part A and part B, and there is a 4 marks question will become, 2 6 marks question will become, and 1 8 marks question will become. Not 1 2 1 marks question, 2 8 marks question will become. And in part B there is a 3 marks for 1 question, 4 marks for 1 question, and 8 marks for 1 question will become. So these are the marking system of your CBSE board exam pattern, question pattern actually. So today we will discuss about some of the MCQ question or 1 marks question from your recently published, that is sample paper for this year, for 2021. So you can see in part A, the first question, which of the following items is not dealt through profit and loss appropriation account? So profit and loss appropriation account is for your partnership account. Okay, they asked which of the following items is not dealt through profit and loss appropriation account. So I hope there is a sample paper with you. Still I am writing here what is the question and what would be their answer. Now which of the following items, which of the following items is not dealt through profit and loss appropriation account. profit and loss appropriation account. Number A, that is interest on partner's loan. Interest on partner's loan. Number B, partner's salary. Partner's salary. Number C, interest on partner's capital. Interest on partner's capital. And number D, partner's commission. Partner's commission. Which of the following items is not dealt through profit and loss appropriation account? So here you can see partner's salary, that is dealt with the debited with the profit and loss appropriation account. Interest on partner's capital is definitely in profit and loss appropriation account. Partner commission also. So all the things is comes to the profit and loss appropriation account. Interest on partner's loan, that is not actually we debited profit and loss account, not profit and loss appropriation account. So number A will be the right answer, that is interest on partner's loan account. Okay, so interest on partner's loan account will be the right answer in that case. Now come to the second question. Come to the second question, that is, for which of the following situation for which of the following situation for which of the following situations the old profit sharing ratio of partners is used at the time of admission of a new partner. Admission of a new partner. Number A, when new partner brings only new partners brings only a part of his share of goodwill, a part of his share of goodwill, share of goodwill. Number B, when new partner is not, when new partner is not able to bring his share of goodwill, his share of goodwill. Number C, I am grabbing the upper portion, that is the question. Number C, when at the time of admission, when at the time of admission, when at the time of admission goodwill already appears in the balance sheet. Number D, when new partner brings his share, when new partner brings his share of goodwill in cash, his share of goodwill in cash. So these are the, what is the question? For which of the following situation the old profit sharing ratio of partners is used at the time of admission of a new partner? So at the time of admission of a new partner, when, which are the following situation the old partners profit sharing ratio actually used? So first is when new partner, that is the first, when new partner bring only a part of his share of goodwill. Second is when new partner is not able to bring his share of goodwill. Third is when at the time of admission goodwill already appears in the balance sheet. And number D is when new partner brings his share of goodwill in cash. So what will be the right answer? Right answer will be number C, that is when at the time of admission goodwill already appears in the balance sheet. So that is the old goodwill, and they actually, this goodwill is not this goodwill share is not actually get the new, who is the new partner who is taking admission in the business. So old partner actually, this goodwill actually old partner share that this goodwill as per old sharing ratio. So if the, when new partner is not able to bring his share of goodwill, that is not meaning, okay. So if he not taking any goodwill with him, that is not a problem. When new partner brings only a part of share of goodwill, that is actually new partner brings the goodwill. So he will be also the there will be goodwill share also brings by him. So he will also get the goodwill shares. So only this is the right when the time of admission goodwill already appears in the balance sheet, means that is the balance sheet goodwill is shown, and that goodwill actually makes by these two partner, not the new partner. So through old ratio they will actually distribute it between them in the case of two, or if the other partner among them. Okay. Now come to the third question in your sample paper. That is, reserve capital is not a part of, number 3, reserve capital is not a part of number A, authorized capital, number B, subscribed capital, number C, unsubscribed capital, number D, issued share capital. Issued share capital. Okay, so reserve capital is not a part of authorized capital, subscribed capital, unsubscribed capital, and issued share capital. Always read the question very carefully. That is, reserve capital is not a part of. Is not part of mean which capital? Unsubscribed capital means it is not yet subscribed. So this is, thus unsubscribed capital is not a part of a reserve capital, which is not still subscribed. So why there should be a part of reserve? Okay, so that is not a in reserve capital part, that is unsubscribed capital is the right answer. Issued share capital is already issued, subscribed capital is already subscribed, authorized capital, you know there is authorized capital you have to make when the company time of formation. So that is also part of reserve capital. Now next question. That is posters number 4. Post Star Charitable Club Charitable Club has income of rupees 16,000 and deficit debited to capital fund of rupees 4,300. For the year 2019-20. 2019-20. Then expenditure for the year 2019-20 is so Port Stars Charitable Club has income of rupees 16,000 and deficit debited to capital fund. So he has an income of 16,000, but still he has a deficit. You know, if there is a surplus, then you have to transfer the surplus to the capital fund and add it to the capital fund. If there is a deficit, so you have to minus it. So total there is a total and income and expenditure account, there is a deficit of rupees 4,300 for the year 2019-22, though there is an income of 16,000. Then the expenditure for the year 2019-20 is, now number A, 11,900, number B, rupees 4,300, number C, that is rupees 20,300, and number D, that is none of this. Okay. So what is the total expenditure they asked to you? Now here see that though there is an income of 16,000, but at the end of the year their total income is 60,000, but still there is a deficit. How the deficit will come? After overcoming the income. Okay, so expenditure is definitely more. So total expenditure they actually made 16,000 plus 4,300, that is 20,300. So this number C will be the right answer. Okay, so that is very intelligent question they given to you, and very simplistic also, intelligent and simple. So usually if you just in your mind, though there is an income of 16,000, deficit is come, so that means expenditure will be more. So what is the total expenditure? That is the, because income, from income if you deducted the expenditure, then the profit will become. So there is a deficit is come, so that means there is a more expenditure than the income. So what is the more value? That is 4,300 more expenditure they happen. So that is total is 16,000 plus 14,300. So total 20,300 will be the right answer, that is option C. Now come to the next question. That is number 5. At the time of dissolution of partnership firm, at the time of dissolution of partnership firm, journal entry for the settlement of loan advanced by the firm to a partner would be number A. What will be the journal? At the time of dissolution of partnership firm, you have to journal entry for the settlement of loan advanced by the firm to a partner would be. Bank, you know what when the dissolution of partnership firm happen, the firm will be, there is no existence of the firm at the time, all things would be settled. So one of the settlement is settlement of loan advanced by the firm to a partner. So firm actually gives the loan to a partner, then what will be the journal entry at the time of settlement? Now bank account debit to, option A is bank account debit. So I am not giving, here is the option. What is the actually right journal? You just say, and that will be the answer. That is the one journal entry which will be right. So what will be the right journal? You just say me. What will be the right journal in that case? Right journal will be bank account debit to loan to partners account, to loan to partners account. Okay, bank account debit, because in bank now this is a liability of partners and bank will be debited because whatever loan you give to the partners should return back. So in the point of view of the firm, the bank account will be debited, a loan to partners account, that is partners loan account would be credited, because the at the time of when the partners taken the loan, the firm actually, that this is the liability of the firm, now this is the liability of the partner. Okay, so bank account debit to loan to the partners account. There is another journal they given loan to partners account debit to bank account, that is just the opposite, that is not the right. Realization account debit to loan to partner account, that is also not right, because realization is happen not against the partner in case of asset and liabilities of the firm. Okay, and none of the above. So this is the right answer, bank account debit to loan to partner account. Now come to the, so for there is a time is running out. So next we will discuss others MCQ question, part A and part B, both the cases. So from there you should get idea which type of question can come in your pre-board exam and board exam. So these are this type of question, that is MCQ question, 1 marks MCQ question will become. So you should, your concept should be very much clear, otherwise you cannot give the answer. Okay, so read the book and do the practice, and this is the end of the class. Thank you. Continue the next classes.